Good morning, everyone. Oh, damn. All right, today's gonna be an exciting day. Be pretty damn exciting. So we got the FOMC meeting today, and that's probably gonna cause the markets to be choppy all day, but we might also see some big moves as well. It depends on how the market is feeling, more or less. So that's going to be really fun. It's going to be at I believe it's 2 p.m. Eastern. So if you're in Central Time, that's going to be 1 p.m. If you're going to be on Pacific Standard Time, uh, that'll be at 11 in the morning. So that's going to shake up the markets if anything doesn't like go to plan per se. So if anything surprising comes out of this meeting, like for example, if homeboy Jay Powell decides to say like, hey, we're gonna go ahead and start increasing rates earlier than we thought we were going to, then we might see some pandemonium going on in the markets. Uh, so just be prepared for that. Like, don't. I would probably say try not to trade until that meeting happens. Unless you're just like scalping beforehand. But try to see what exactly is going on because like it's gonna be pretty volatile most of the time. Most of the time, we can see the market spike up or spike down, or they could spike up and then reverse and then come back down. Like a lot of stuff can happen with this, so just be prepared for that. So today we're probably, depending on what happens here on Walmart, we might have to. This might hit our stop loss. Um, Yeah, I think it's trying to go for it right now, possibly. Let's see if it gets stopped. For me, like over this level right here, this Fibonacci level, I'll probably stop out of that. I might hit it and then reverse. That's kind of why I use it as a stop level because could be a point of resistance that it just gonna go ahead and reverse and go back down, but it could also break through. So that's why I'm not. Yeah, now it's like, will it push back down? But I feel like it's gonna squeeze because a good amount of people are shorting it, including me. But I know for a fact, right when it hits my stop loss, I'm gonna start losing money. I mean, it's gonna reverse. That's what's gonna happen most of the time. It's gonna break through 46. Let's see what happens. Our portfolio isn't doing too bad right now. See if it breaks through 46, then yeah, all right. I'll start taking some risk off then. So this is basically like if it continues going up, I'll have less. So I'll have less risk on the table. So it's like I'm taking some losses right now, but I've position sized correctly where it doesn't necessarily matter that much. Let's see here. So FedEx is going up. All right, I do want it to go back down one more leg. Like I want it to be down in this area right here. in the 238. Yeah, sorry when I took some risk off Walmart, decided to go back down. So we could see a flush after this. So the reason why I took some of my position off is because it could have easily like pumped, because like a lot of people are shorting it, so it could have easily just like kept going to this next Fibonacci level. So I wanted to make sure that I have less money in it since it's not going the direction that I want it to. But if by the end of the day today it closes underneath that Fibonacci level and maybe it's like pushing back down, then I might add back into it. But for now, that's what I'm thinking. So over here we got Dropbox. I really feel like Dropbox gonna get short squeezed. I am shorting it, to be clear. I do have my alert set up right above the previous day's high, and I'll probably cover my short if that's the case. Um, let me see here. All right, so Walmart retreated a decent amount, so I kind of got pooped on there. I mean, not necessarily. It's not terrible, but I just kind of knew it was gonna happen. But I just have to get comfortable with those situations. GM. So this Goldman Sachs going down is probably the most beneficial for my account. Let's say I am liking this though. All right, so for uh, SPX, for example, all these levels, like I think Twitter is a great source of information. So let me go ahead and go over here. So there's this guy that it has the like is paying for this like expensive software and stuff, and he like the levels he puts out, like whenever I'm about to like follow someone on Twitter, I like checking their past performance basically. Like this guy doesn't really like do anything like give his own input on things. He just says these are levels of interest, and he only trades futures basically. So I like looking at his latest post and then like go ahead and use his levels because his levels are pretty solid. So let's see here. So he has this thing called a smash level, and then that's basically deciding if it's above that, then you should be bullish on it. If it's below it, then you should be bearish on it. Um, so I just really wanted to check real quick the levels that he has. Okay, so he's got 38. I've got 40. 2418. Alright, so we go ahead and put this up to 24. Go ahead and do it like this. Usually I would do this beforehand, but there we go. And then go ahead and do this one again. We'll do the dotted one. Or the dash, my bad. And go ahead. So this will give us kind of a heads up because you can see it rejected this level up here. He's got this one at 38. Yeah, so it does look like it's gonna go down and it's gonna end up finding support at this level right here, this 24 level. That's usually what happens with these levels, is that if it rejects one side, it's probably going to go down to the next level most of the time. And that's kind of like what my trades are like. So usually I get onto the 15 minute, and I look at the SPX when I trade the SPY because they're like the same thing except um, the levels that are given obviously only work for the SPX because it's not like it's perfect. You know, there's like a little bit of a discrepancy between the two. So this was a trade that I did yesterday that I made money on. So let's see. It does look like it's getting bought up in this area here. So the short term is 24.18. Alright. Go ahead and delete this one. Yes, this is actually a pretty good area to short the market for the first candle. It peaked up, it got shorted, false breakout, come down to 24. This is gonna bode well for my shorts. That's probably why Walmart peaked up and then came back down because of this. Let's see. Oh yeah, GS 83, beautiful. Walmart 145. Dropbox, Dropbox, bro, no. Yeah, Dropbox squeezing. That's kind of, yeah, Dropbox passing. I have a small position on Dropbox, but at the same time, like, I'll respect what I previously said, and I'll go ahead and take my contracts off. Alright, sweet. Alright, so I stop lost out of Dropbox, and it's gonna probably reverse now too. You know, it's once again usually how it goes. I don't know, but like Dropbox is kind of like a risky trade, which is why I left it so small. Um, because it could either like dump further or it could just spike up a crazy amount. So I'm just like, I'll just do halfway. Like, look at this rejection. Oh my goodness. I might add on my Walmart trade just because of that rejection. All right, so I added on it. If it goes back up the rest of the day, you know, I'm gonna kind of get pooped on. Like this could easily get short squeezed. You know, like I feel like I'm gonna regret this on Walmart. But the setup is there, even if it's emotionally taxing. You know, that's the thing about emotions with this is that if when you follow a position long enough and you're like, okay, by now it should have, made the move already, or like now it should have done this, now it should have done that, and then you're like, you know what, I don't want to deal with this anymore, and you just close it because you don't want to look at it. Like, I feel like that's how I'm feeling with Walmart, and I say that as it's coming back up. Damn, I had my camera in front of the charts the whole damn time. Maybe if I had someone in the chat, they could have told me. Yeah, it looks like it's. You see this? You see what I'm saying? Oh, okay. If there's another rejection here, that's gonna look a lot better. But uh, so far, it's zero me. Walmart gonna be two at this point. Yeah. It's because the SPY's coming back up. Sometimes Walmart and S&P 500 are not correlated. Yeah, that's what's happening. Yeah, so it's gonna drop down to 24 now. Um, so Walmart is considered like a safe play, which is why it reverses. I feel like because it's like it's a brick and mortar store, this that blah blah blah. I feel like that's probably why. Yeah, no, it's. I mean, it sucks for me, but that's probably why it's going up. FedEx has probably some of my favorite setup of these trades. Like it could easily just break down, but like it's basically doing like a bull flag kind of thing where people that are shorting in this area, they're gonna see that FedEx is not moving downwards as they want to. So there needs to be another drop to trap them, and then we could push through using earnings as a catalyst, and it'll just pop off. But I do want it to go lower though. I do want it to hit this 38 point. Speaking of earnings, it is tomorrow. It needs to drop today. So, oh, okay. It's Goldman Sachs. All right, time to take some more profit off of Goldman Sachs. Goldman Sachs trade has been really nice. All right, take 10 here. All right. I guess the next take profit I'll put down here as kind of like a YOLO. Like if it wants to go down there, I'll be ready. You know, it's kind of how I feel about it. So it's gonna like make one leg lower and then take advantage of that. So I'll go ahead. I'm gonna set up a stop loss. So I bought it up at the 97 area. It was a really good trade. This is one of the trades that I didn't go with. What is it called? I didn't really go with options on this one. It was mostly just like a commons trade. But if I went with options, this would have been astronomical. It would have been a crazy trade, probably like 100, 200% return on this one. It's funny because like after like this trade basically happened more or less instantly, and GM happened so fast that I couldn't even have my position on it. I just went with my starters, and that's just kind of how it went. Let's see. So we actually just got filled on a trade here. I believe it is a reversal trade. So if we go, so I got filled on Neo. So for my in channel reversal trades, I use this Fibonacci. I mean, I went for it because why not? Because technically, like this strategy is a 60% win, but with market conditions the way they are, um, let's see what happens. I guess like this trade is kind of like a short squeeze pullback kind of thing. Because I feel like there's gonna be, like everyone's gonna think it's gonna be going down because Neo Chinese company, this that blah blah. Electric company, this that. Like it's pretty speculative. So I wouldn't be surprised if people want to see this push down lower. Like yesterday, for example, it gapped down, it came down, then it came back up. Now today it's probably going to be scaring these people, but there is a potential that it's going to pop back up and then show consolidation in the channel. Like the whole point of this trade setup is to take advantage of consolidation in a channel. That's basically that's basically what this trade setup is. If the markets are choppy, you'll want to use this because if they're choppy, they're probably not gonna make huge breakout moves. Like this is like inside of a channel trading. Like yesterday, for example. I mean, I kind of can't show it because this Fibonacci's on real time, but go ahead and go back to SPX. Damn. All right, let's go to the 15-minute. Damn, look at this move. This is a very, very nice trade. Anyway, so yesterday I was doing a trade, and it would have been the open to the high, and the trade in question, I was shorting at a break below this, right? So a break below this level. And so I got stuck and then it came back up. Because the markets are choppy, it reversed in this area, the area between these two Fibonacci's. And then it came back up, hit the level that has confluence with this Fibonacci level, which is another important Fibonacci level. And then it dropped down, and then I took profit down here. Now, if I would have waited and hit it here, like I did add when I was right here, but if I would have just taken the whole trade here, this move is crazy. So in this opening, the market was choppy, which is why this made money. And then afterwards, it decided to, I guess, unchop itself. It decided to do a little bit of a trend, and then it reversed halfway through the day. Now the start of today is this candle right here. We're seeing a drop. Now, if we find some support on this 18 level, we could see a pushback up to 24. If it breaks through 24, we get to 38. That's kind of how it works. Let's see here. I mean, like here you see it broke through here, and then it almost touches. It gets in the area, but it doesn't necessarily get exactly to it. So I guess it's more like there's going to be a push in that direction. Let's see here. Current trades, FedEx. Damn, Walmart's a pain. Just go down Walmart. If we can see just a flush day on Walmart and then it comes down to like this 43 level, or it, wants to go down to this 42 level. Because I'm hoping here that this is trapping people that want the breakout. People that want it, because technically it did break over this trend line yesterday, right? And if it can go back underneath, I feel like that's going to be a really powerful move downwards because we have all this buying here, all this buying, and people are just getting really hype. I mean, here we have three big candles on a reversal. We got a big, upper wick, and then we flush. If this candle closes and we're like down here, and there's this wick up here, that would probably signify a push even lower to this support level down here. And then you can see like this kind of like head and shoulders pattern where it's going down, up, down. So like shoulder, head, shoulder, and then we go up. So even if people want Walmart to go up right now, I feel like this is the play you want to wait for it to go up. Or else like up here I feel like you're exposing yourself to more risk than you should be exposing yourself to. So that's just kind of my opinion on that. So FedEx looks like we're gonna get another drop here, which is good. Get a drop here if we can get a pickup in this area. That'll be sweet. Neo. It's not really like dropping a lot right now, so that might actually be good for us. So my stop loss is under this right here. And usually when you get to these points, a lot of people are going to be trading this because of the risk to reward ratio that is present. So the risk reward is really good here because all you do is, you just play the previous low and then you have all this as like potential upside to it. So I feel like that's what happened yesterday. So maybe some of those people are getting shorted out right now. I mean, shorted up, stopped out right now. But I'm hoping there's going to be just one more push upwards. But at the same time, those people could lose the battle and it would just continue flushing downwards for the previously explained reasons of it's a Chinese company, like why would this that like like right now Chinese companies are very very iffy. And speaking of Chinese companies, let's see how Baba is doing. So Baba, this is kind of funny, but I did trade Baba uh, on this candle right here, but I'm kind of stupid, so I forgot to like actually trade it at the right time that I wanted it to. So I got in a little late and I was able to do a little scalp on it. But so I believe this is okay. So this was a Friday over the weekend, right? The CFO gets fired or quits, right? So usually when that happens to a company, it's bad, right? But it was also hitting off of a Fibonacci level or several because I found okay. You see all these lines? I found I was looking at every possible um I guess iteration or any possible Fibonacci that could be put on this chart. And there was a confluence right here in this 110 to 115 area, right? So in my head, I'm like, all right, it's technically at a support. The CFO just left, which is a good thing, right? Like I mean, some people like I was looking on the Twitter, people were talking about pandemonium. They're like, oh my gosh, I'm doubling down on my puts right now. It's gonna go crazy. But usually when the news comes out, that's when there's gonna be a little bit of a reversal. So there was no actual pullback in Baba in a while right here. So earnings comes out, it drops, and then like this is like 2 3 weeks of just going down, just every day. I mean, maybe like there's like 1 day pullbacks, I guess, but an actual like significant pullback like this did not exist yet. So I knew there was going to be a pullback at some point. This day, it ended up going from 114 to 124. And basically, I like 15 minutes in, I'm like, "Oh yeah, I want to do this Baba trade." And then I go on Baba and it's already at like 118. But I could tell the way that the price was moving that to it really wanted to push to the 120 level. So when I saw that, I'm like, okay, I'm just gonna jump in 118, and then I scalped 118 to 120, and then I got out. So that's why right now you're finding support at 120 because that was a resistance level. And right now, technically, even though we are in a downtrend, this is kind of like a bull flag, you know? So like it's here people are like, "Wait, there's a channel trading, and then we want to see it break upwards," which it might happen. If that happens, there's going to be a massive short squeeze because everyone is shorting these Chinese companies. If Baba gets short squeezed, Neo's going to probably get short squeezed. Any Chinese company is probably going to get short squeezed because it's like the money is almost too easy. You know, and people who already made money, they know that other people are shorting this, so they're like, okay, the short squeeze might be crazy, so they might be perpetuating the short squeeze, if that makes sense. So that's why I was okay with that play on Neo. Um, this is something that could happen. We could also see it drop below this level of support, and then people start shorting it a lot, and then people are like, okay, let's squeeze them out. So they start buying up the price, even though there's kind of no reason to buy up the price, but they're gonna buy up the price. And then people who are like, okay, well, I'm trying to break out, and right now it's not working, so I'm gonna cover my short. Then that's what we'll see another squeeze. You know, that's usually how it goes. Um, it's pretty fun, honestly. I mean, just like thinking about all these things. I mean, granted, you can jinx yourself out of things. Like for example, with Walmart, where I covered like at like 146, basically. I covered a little bit at 146, but it's important to know why things happen and the psychology behind them. Because if you trade on raw emotion and like raw instinct, um, you're gonna lose. And the reason why is because the market is made where if you think logically and you're like, oh, this has to happen because of like this very logical reason and this, that, blah, blah, then it might work out. But most of the time, like, you're gonna, like, mentally, you're gonna get destroyed, because psychologically, like, markets will break you if you don't understand this. And like I like the reason why I'm saying that is because like I went through the same stuff where it's like I went through a period of time where like like Zoom went up like 100 something percent and I was playing heavy options and I was like multiplying my money, like I was basically printing money out of the markets using all these companies that are just making massive moves. Then when the market changed, I didn't adapt, so I was still putting these massive positions on the things that were working for me for like the last 3 months. And they just weren't working because the market changed and I failed to adapt to the market. And then at that point, I'm like, okay, well, where's my stop loss then? And this, that, blah, blah. Because like it was like too easy making money before, and I never had experience in a different market where you know short squeezes that go up a bunch or this and that. Like you don't really have to worry about a stop loss because it's going to move in that direction. So that 100% humbled me, and I mean you kind of have to get humbled after uh, an experience like that happens to you. But it's important that you try your best to bounce back and recognize what your shortfalls were. Like what are the issues? Like you have to analyze yourself like almost psychologically, basically, because this is this is all psychological. Like all these levels psychological. Like literally everything. It's crazy, but once you start understanding and like trust me, like at least for me it took a while to click. Like even after like 4 years of like being in the markets, like I still didn't really have a great idea of what was going on. Then like 5 years, same thing. Now on my sixth year, and within my sixth year, I also went through that phase where I made a bunch of money. Like I'm kind of starting to understand. Okay, this is what's happening. This is the psychology behind it. Like if I use Fibonacci, then it helps my brain dissect what's happening better than if I wasn't using it. For other people, it's maybe like moving averages and things like that. For other people, it might be like VWAP. For other people, it might be any other of the indicators. But you have to just see something that is simple. It speaks to you, because having a bunch of indicators doesn't really matter that much. What matters is that you have the conviction in knowing that when you see something, like that's what's going to help you out. Like that's what a winning trade looks like. You know, like right now I could be looking at RSI, I could be looking at MACD, I could be looking at all that. And trust me, I tried everything, and like this is where I ended up at. I ended up at just using Fibonacci and just extremely simple trend lines. And my part in it is just to make sure that my risk and reward is looking good and just trade. You know, try to be consistent. Try not to like flip flop too much on your decisions. All these things that you should be paying attention to. So I'm saying this as I'm looking at my number one annoying trade for this week. Like that's where no matter what happens, you need to just stick with it. But at the same time, if you're literally on the verge of like a mental breakdown over a position that you have in the stock market, that probably means you have too much money in it. That also probably means that you don't really believe that much in it. And sometimes, if I'm starting to feel that way about a position, I'll be like, you know what? I'm 100% okay with, taking this loss for the sake of my mental sanity, you know? And then even if afterwards it moves this, that, like once you close a position in it, just just be done with it. Like that's why I have my current trades watch list. Granted, I think I just closed Dropbox, and once again, I closed Dropbox when it spiked up. So like technically, oh, I didn't have to take that loss, but since I knew it was risky and I put a small position that I was okay with losing, I don't really care, and now I'm just gonna move on. Like, that's kind of like what the thought process is here. Like you just protect your mental sanity. If you protect your mental sanity, then you have a better idea of what's happening because you're not like losing your ish. You know? Uh, yeah. So that's just my rant about this. I mean, let's see what happens with Walmart and stuff. I'm gonna check SPX real quick to see if there might be a trade that we can do. So it looks like the trade might be It looks like it might want to break up, break upwards here. It is stopping at 24. Let's see what our trusty friend says. So it's in between the smash levels, apparently. Damn, this is probably gonna end up. It's probably gonna hang out in here and be choppy. I wouldn't be surprised if that happens for like the next few hours or so. But that's just what I'm looking at right now. All right, I don't really like any of these setups as they stand. Bro, like look at Walmart. Like, what is this? What's happening? You know, it's happened before where the morning it does this, and then like an hour or two after the market open, then it like spikes. Like that's what happened yesterday. Like where it goes up, goes down a lot, goes up, goes down. Like this has been happening. Goes up, goes down, then goes up again. I mean, this one just went down and then just went straight up. So yeah, like so literally for the last 3 days, it's been doing this pattern where it spikes up, comes down for a little bit, and then goes back up. So spike up, goes down, and then just. I swear, if we have another upwards trend day in Walmart, I might lose my shit. Like I went through this whole talk about mental sanity or whatever, and how this here is an annoying position for me. And yeah, like if there's a fourth day in a row that it does the same pattern, that would be really annoying. If the only difference in this pattern is that it spikes upwards earlier, like 30 minutes earlier than it usually does, I don't know. That would be really annoying. I mean, if you see the buying pressure here, like it's getting stopped right here. It's getting stopped on this 145 support level to like the previous day highs. Like right when it gets in between those two levels, it gets bought up. And so like I don't know, maybe if we see another sell here, if it sells off again down to the 145, they're finally gonna give up maybe. I don't know. Let's see here. We got Neo. Yeah. Neo stop loss, I'm pretty sure is at like 29. Yeah, 29.70. So there's still a dollar to go for me to get stopped out. Let's see what the Fibonacci is on this smaller scale. Yeah, so I guess it could still bounce off of this 33. If it doesn't bounce off of the 33, then like it could go down lower, but then still not break out technically. But it is looking like it's. I mean, obviously, it's looking like it's selling off a good amount. Then Walmart wants me to die, which is chilling. That's cool. FedEx had a little bit of a dip, but I wanted it to go a little bit more. But what are you gonna do? GM looks like it might be breaking out to the downside here. Goldman Sachs went like I guess it bounced off. Yeah, it bounced off of this level here. Let's see what happens to it. But either way, I have a very small position. Like GM and Goldman Sachs right now, I've got really small positions in. My only actual positions are Walmart. Walmart, and I guess my next biggest is Neo, and then FedEx is my smallest because, you know, I my buy is on this next Fibonacci level. The idea is, you know, it comes down, bounce off of this one, then if it gets stuck on this trend, it'll come down, and this is the best buy area converging into the earnings, and then it's gonna break through this trend, and then hopefully, if it's good enough, it'll break through this next level at 255. You can see go to 267. Um, that's the best case scenario. But it's gonna have to go down. It's not really going down. It's so close. I'm like, if by the end of the day it doesn't go down there, I might just throw on like a YOLO option, like an option that I'm okay with losing, but I'll just throw it on there just because if I'm right and it does go up there, then I don't have to be annoyed with only having a small size on it. Uh, uh, but yeah. All right, I think that's it for the morning. I might go live again when the meeting is happening, just so we can, you know, laugh at the market together. But apart from that, I think I just covered everything I wanted to cover. So that's awesome. All right, well, I hope you all have a good day then.